Welcome everyone to Vested Interest. This is Shane, and before we get into the video, I'd like to take a moment to thank everyone who's taken the time to watch, comment, and like the videos, and a special thank you to those who subscribe to the channel. I really do appreciate it. On this channel, we cover dividend growth investing. We cover portfolio updates like this one here. Every Sunday morning, we did add $1,761 in new capital to the portfolio. I will go over everything that I bought with those funds, any sells that I make throughout the week, any options plays that I am in. Again, every Sunday morning we do this portfolio update, fully transparent on this channel. I want you to see how a real portfolio is built out over time, the ups and the downs involved along the way, and believe me, there have been a lot of red days lately. So if you are a dividend growth investor and you are on your own journey to financial freedom, join us on our journey to financial freedom. Join the Vested Interest community. Hit that subscribe button down below. Hit the notification bell so you are notified whenever we post any new content. Building a community of like-minded dividend growth investors so we can share our experiences. Portfolio updates like this. I do a stock pick of the day series Monday through Thursday where I look at a company's stock that has pulled back on the day to see if there's any value being presented there. I also do a couple monthly series where I cover the dividends paid for the previous month, and as we enter into a new month, which we will be here in a couple weeks, entering into November, as we turn the page to October, I will look at stocks I am looking to buy for the upcoming month. Now, some of those may adjust as the market adjusts, but overall those will be the ones that I focus on. So again, if you are a dividend growth investor or you are into this type of content, hit that subscribe button down below and join us on this journey to financial freedom. So we did add $1,761 in the portfolio. Let's look and see what we did this week. So we will start out with options, and boy, there were a lot of them this week. So I have not been getting much luck with options. So I went in and actually entered several last Sunday, and wouldn't you know it, this week, all of them happened to hit at once. So let's quickly go over here. On October 9th, we had HPQ covered call with a $27 strike price. October 13th, which was Friday, was the close of that contract. That netted us $24.94, and that was actually two contracts. We had three contracts in Verizon, ticker VZ, and a $31.50 strike price. Same October 13th, Friday the 13th strike price or close date there, and $40.41 on that one. We had one covered call on CVS with a $73 strike price, $28.46 in premium on that one. Two covered calls for $53 strike price on NextEra Energy, ticker NEE, at $48.94, and one on Nutrien, ticker NTR, with a $62 strike price, and all of them again closed on Friday the 13th there, and that was $14.46. All total, we added $157.21 in cash from the options premiums. Now let's cover on the 13th. CVS expired out of the money, so we keep those shares. NextEra Energy was the only one to be assigned, right? So NextEra Energy, you can see here down at the bottom, those 200 shares did get sold at the $53 strike price because it was a little over that. I think it was $54 and some change. So what I'm looking to do, if you've been watching the channel for a while, I am probably just going to take 100 shares, so cash, half of this cash right here, I'm going to redeploy across the portfolio. I am going to do a covered call, or I'm sorry, a cash secured put with the funds from the other 100 shares and continue to run this wheel on NextEra Energy. Verizon, again, ended the week out of the money, so we kept those shares. HPQ, same thing, and Nutrien, ticker NTR, the same thing. So the only one that was called away was these 200 shares. So right now, we technically have $10,599.88 in cash that we will redeploy. Half of that will go back into a cash secured put for NextEra Energy. We want to maintain those 100 shares, and the other 100 shares, that cash, I will redeploy across the portfolio. Probably not all at once next week, but definitely over the next 2 to 3 weeks. So again, $157.21 in options premium, and this was reinvested right away. We'll see that here in a little bit. Now on to dividends. A lot of dividend activity this week as well. We had dividends paid out on October 9th, on October 12th, and October 13th. It started out on October 9th with Sibanye-Stillwater, ticker SBSW. This is a mining company in the material sector. Now they paid us $61.52 in dividends. But you'll see here my brokerage account, and I use Ally Financial for my brokerage account, for my main brokerage account. They take out the taxes right away. So you see where they removed the $12.30 in taxes. So $61.52 minus the $12.30 in taxes leaves me $49.29, which automatically gets reinvested because I have the drip set after the taxes. Whatever's left is automatically reinvested back into SBW. And we picked up 8.77343 shares with that $49.29. And next up, Medical Properties Trust, ticker MPW, paid us $105.41. And that went right back in. Again, I have the drip set dividend reinvestment plan, so it automatically goes back in and buys more shares of whatever company pays out. It goes back in and buys those shares. And that picked up 19.3101 more shares of MPW. And the last one here on the 13th, Realty Income, ticker O, another REIT there. So MPW and O are both REITs. SBSW is out of the material sector. And Realty Income paid us $40.25 and automatically went back in and bought 0.80054 shares, getting very, very close on Realty Income to being able to pick up a full share every time the dividends are reinvested. And this is a monthly paying REIT here. So all total, these new shares that were bought by the dividends paid out added $15.97 in additional passive income over the next year. So this is positions already in the portfolio, paying out dividends, going back in to purchase more dividend or more shares, which increases the passive income over time. So this is that dividend snowball in effect. I didn't have to invest any new amount of funds into any of these positions. They are now accumulating more funds on their own every time dividends are paid out. And this will continue quarter over quarter. SPSW is a semi-annual payer, pays out twice a year. Medical Properties quarterly, 4 times a year. Realty Income monthly, so 12 times a year. So whenever these pay out, we'll get more shares every single time, even if I don't add any new capital to these positions. That is the dividend snowball in effect. Now let's keep going here. On October 12th, we finally started our first investing of the week. And as you can see here, we were paid out, if you recall, $157 and some change in the options premium, and pretty much that went right back in here, $160.88 on the 12th, and picked up 2 shares of Ally Financial, ticker ALLY. This is a bank out of the financial sector. This is actually my bank. This is the bank that I use and for my banking, my savings, my checking, my kids' custodial accounts, as well as my account, my investing account. So I do invest in my own bank as well. And those 2 shares were picked up at $24.88. This is a high dividend yield right here. It's about 4.8, I believe, just under 5% right now. So I love to add it down here. Anything under 25, I'm adding here. Haverty Furniture is a relatively new position. I'm trying to build this one out. So we added 4 more shares, ticker HVT. This is out of the consumer discretionary sector. This is a furniture company here. We added those shares at $27.78. And all total, these new shares here added $7.20. And we weren't done. The majority of the investing new capital that I put in, $1,632 on Friday the 13th. With those funds, we picked up 1 more share of Medical Properties Trust, ticker MPW out of the real estate sector. We picked up that share at $5.16. We added 3 shares of AT&T, ticker T, out of the communication sectors. We added those 3 shares at $14.57. And I am going to continue to nibble on AT&T. Very high yield on this, over 7%. Really like this one. Medical Properties Trust as well. Going to continue to nibble here. Anything under $7, $8 per share, I'm going to continue to add. Very high yield on this one, even though they recently cut their dividend. They are over 10%, 11%, I believe, right now. So very high yield on these 2 here. Ticker HPQ, which is HP Inc. We added 8 more shares at $26.72. I'm pretty close to closing it down on this one. I might add, another 20, 30 shares here over the next several weeks, but this one's pretty close to where I want it. So I might nibble a little bit here, anything under 27 for a while, but this one's pretty close to being where I want it here. Cisco Corp, ticker SYY, is another recently added position. So I'm trying to build this out and get to 100 shares here. So we added 10 more shares there at $62.89. Johnson & Johnson, we have been adding to ticker J&J for a while now. Oh, so close to 100 shares. I think we're at 96 now. We'll see here in a little bit. but also close. And again, I'll probably build this to 100, maybe 110 shares, and then back off of this one because it is the largest position in the portfolio, and I don't like any one position to get over 10%. It's getting very close to that now, but I at least want to hit that 100 share mark. We picked up those 2 shares at $157.24, and I like this anytime it's under 160. And there's that Haverty Furniture Companies again, ticker HVT. Again, I want to build this out to at least 100 shares as well. So we picked up 14 more shares on Friday at $28.17. And I like this. I believe it's under $28.50. Right in there, anything under $28.50, I will continue to add to this until I get to at least 100 shares. All total, that these new shares here added $56.43. All total, we added $1,761.20 in new capital, and the total passive income from the dividends paid out as well as the new capital invested added $79.60 in annual dividend income. And again, this is that snowball in effect. When I add new capital to the positions, whenever I add or whenever the dividends get paid out and they reinvest into the positions, that's that dividend snowball keeps accumulating faster and faster month after month, year over year, and that is what it's all about. So very nice to see. About 80, we're in the $70 to $80 range every week in additional passive income added. So I am buying future income here with my capital. Now let's look at the portfolio sector weights breakdown here. Communications is sitting at 8.64% of the portfolio. Consumer discretionary makes up 0.69. This is that Haverty Furniture's position that I'm building out, as well as Williams-Sonoma. I have a couple other in that sector that I'd like to add here over time. Tractor Supply is one I'm really watching heavily. Pool is another one that I really would like to add, but I'm waiting for a bit of a pullback on those. I'd like to build this out. This is a very, a little sliver of the pie. I'd like to get this to 6 to 8% of the portfolio overall, but we will build it out slowly. I'm not looking to do it all at once. We'll wait for the value to present itself. Consumer staples sitting at 6.05%. This one right here, Procter & Gamble, is getting very, very close to being a buy again. So really looking forward to adding to that position as well. Energy sector makes up 6.84%. Financials sitting at 9.66% of the portfolio. Healthcare is at 18.51%, the largest piece of the pie. Theirs is that Johnson & Johnson, as well as several others, CVS, Pfizer. I have a couple in the healthcare sector. Excuse me, still getting over a bit of a head cold I had this week, but feeling a lot better today. Industrial is making up 8.27. There are several companies in the industrial sector that I am watching as well. Lockheed Martin, General Dynamics too, that I may be adding here over the coming months that I'm really looking at heavily right now. Technology sitting at 8.78% of the portfolio. Materials makes up 14.46%, currently sitting in second place there, second largest. Utilities sitting at 5.38%. And technically, I don't have those 100 shares of NextEra Energy because those 200 shares were called away. But I'm still counting that because I'm just going to run that covered call, or well, now cash secured put, until those shares are assigned again to get it back to 163, I believe. And I'd like to get this to about 200 shares, and then I'll stop adding at least to the NextEra Energy. There's a couple other ones that I'm watching in the utility sector, but looking for more of a pullback there. And REITs and real estate sitting at 12.71% of the portfolio. MPW is one I'm looking to add, as well as Realty Income, the monthly paying rate. That one has really pulled back, so I'm going to nibble on that one, 2 to 4. Might even drop a big tranche of 10 shares on that one of these weeks. It is over 6% dividend yield right now, very nice, or right around 6%. So very nice dividend yield for a monthly payer. So if you don't have anything in the REIT sector, Realty Income is looking very attractive right now, and I like that. Anything under 60, I believe it's right up about $50, $51 per share right now. So looking very, very attractive. Now, I don't have any ETFs. I am not against ETFs. I have a couple of different ETFs in my daughter's custodial accounts, SCHD being one of them. Ticker VWO is an emerging market ETF I have in there. And I am also looking at VUG, which is more on the tech side of growth in tech, to add to their portfolio as well. So I have ETFs in my daughter's custodial accounts, just none in my retirement account. Now, here's what a lot of you come to see week after week. Again, I'm going to be fully transparent. I want you to see what a real portfolio built out over time looks like, the ups and the downs associated with it, so that you can see, just because your portfolio may be in the red, that doesn't mean you freak out or you're doing something wrong. It happens. It's part of investing. No one's going to get it right all the time. Even the greatest, they say that they'll be wrong, 40-50% of the time. So If they're going to be wrong over half the time or around half the time, you probably are too. But that's all right. These are the times whenever there are big pullbacks, in my opinion, that you double down on good companies. If you walk into a store and there is a sale, you don't run out because the things you were going to buy anyway are cheaper. You buy more of them. Well, that is the same idea behind investing. So whenever I see red, I actually see buying opportunities. It's an opportunity to decrease my cost basis, increase my dividend yield, and increase my future return. So as you can see, there is a lot of red in my portfolio, but I have been adding consistently to a lot of these positions week after week, bringing down my cost basis, bringing up my dividend yield, and bringing up my future passive income here. So here's the ticker, right? What the companies are, how many shares I have of each company, their current price as of the close of business on Friday, the market value as of the close of business on Friday, my cost per share, my purchase price. So this is what I have into it, what I am, whether I'm up or down right here, and whether I'm up or down percentage wise right here, what sector the companies fall in, whether they're a quarterly, monthly, semi-annual payer, their current dividend yield as of the close of business on Friday, my yield on cost. There, on the previous slide, we saw the sector weightings. This is by each position. Estimated annual income in this column, payout months, they fall in here, and the annual dividend growth, at least most recent annual dividend growth here, and where they sit at 15% of 52-week low. Now let's talk through this one right here. Union Pacific is a perfect example right here. UNP, Union Pacific. This is a railroad company out of the industrial sector. So they are currently sitting at $207.88, at least as of the close of business on Friday. My cost basis is $196.43. Now, typically, I like to add to positions whenever they were under my cost basis. Obviously, $207.88 is not under my cost basis, but I have been adding to this. I didn't add this week, but I have been adding to this, and I will continue to add to this over the coming weeks as long as it's under $211.24. So the 15% of 52-week low kind of sets the cap of what I'm willing to buy it up to. I don't want to pay over that, and I like to pay under my cost basis, but I'm willing to go over my cost basis if it is under where it sits at its 15% of 52-week low. I hope that makes sense. If you have any questions, drop them down below and I'll try to explain it better. So total shares, I'm sitting at 5,160.029 shares. The current value of the portfolio is $165,729.47. I have $179,785.57 invested. I am down. I am in the red, $14,056.10, or down 7.82%. If you remember from last week, I was down a little over 9%, just under 10%. So this has actually come back up. And here a few months back, I was actually in the green. So again, the roller coaster ride, up some, down some, win some, lose some, month to month, quarter to quarter, that is part of the game. Over time, eventually, this will all be in the green. But right now, we are seeing a big pullback in the market, at least in companies that I'm in. So I am taking it as a buying opportunity. Again, decreasing my cost basis, increasing my yield, increasing my future potential returns. Current yield is sitting at 4.906%. My yield on cost is 4.523%. And this is what it's all about, in my opinion, whether the market's up, whether the market's down, whether the market is floating sideways. The passive income provided by the positions in the portfolio, the dividends paid out on a quarterly, sometimes monthly, semi-annual basis, $8,130.90. So this continues to grow week over week, month over month, year over year, and we are on our way to 10,000 and beyond here quickly. I think I will hit just over 10,000 here probably in the first quarter of next year. So really enjoying seeing this grow week after week. And hopefully your portfolios, if you are a dividend growth investor, is doing the same, even with the red. So I'm not focused on this return over here because I don't plan on selling in out of any of these positions. So I'm not really focused on this. I am focused on the passive income provided, the dividends paid out, again, on a quarterly, monthly, and semi-annual basis. Now, the dividend growth is sitting at 7.36%. That's cumulative of all the positions, so it should be an average. Now, I don't have this math quite worked out yet, because what I need to do is I need to adjust this. This is just basically an average, but I need to do an average by weight, right? Obviously, WSM is a fast grower at 26.03%, but it is not impacting the portfolio as much as, a position like Verizon that's only growing at 1.94%, but is 5.5% 0.58% of the portfolio, right? 0.2% of the portfolio is not going to impact as much as something that's sitting at 5, or something like J&J up here, which is the biggest, 9.15. Again, that's why I said 96.682 shares of Johnson & Johnson. Once I get to about 100, maybe 110, I'm going to back off because I'm real close to being 10% of the portfolio in Johnson & Johnson. I don't want any one position to be over 10%. So that is another kind of rule that I've set for myself. You should be setting some rules for yourself too. Don't let any one position be bigger. And I know there are some people out there who are really isolated into a few stocks. Warren Buffett, for example, Apple is over 50% of his portfolio. But for me, I'm not a multi-billionaire. So I am going to be a little more conservative. And like I said, I don't want any one position over 10%. Well, that is it on this one. Hope you enjoyed the portfolio update. Let me know how your portfolio is doing. Are you still seeing a lot of red in your portfolio? Are you starting to see some green now? And what are you buying, if anything? What are you watching, if anything? Would really love to hear from you. Drop it down in the comment section below. And as always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join us on this journey to financial freedom. Join the vested interest community, building a community of like-minded dividend growth investors so we can share our experiences, stocks we are buying, stocks we may be avoiding, tips and tricks we've learned as investors along the way. We cannot benefit from each other's investing, but we certainly can benefit from each other's knowledge base. So that is what this channel is all about. And hit that notification bell as well. And I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. So if you have any comments about the stocks that I bought, questions of why I'm buying them, or suggestions for stocks to look at in the Stock Pick of the Day series, go ahead and drop them down below, and I'll shoot you a reply to most of them, hopefully all of them. If I don't reply, I am busy. I do have a full-time job. I am married and have 2 kids, so they do like to spend time with me from time to time. So just bear with me. And it's not that I'm ignoring you. It's just sometimes I do get a lot of comments. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by, and we'll see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing journey for educational and entertainment purposes. Investing involves risk. You can't lose money. You should never invest any amount of comfortable losing. Always do your own research, invest based on your situation, circumstances, and select criteria, or seek the advice counsel of a certified financial advisor.